Hello traders, welcome to the LFB and our global video charting review. This video today for February the 3rd, 2011 will contain all three reviews of equity, commodity and currency markets because we really haven't got an awful lot going on outside of a swing point possibly forming on the dollar index. The anticipation of what the ECB may have been able to do with interest rates at their meeting on Thursday did not follow through to anything other than maintaining the 1% overnight interest rate. There'd been chatter that the ECB may be forced to move on interest rates or at least intimate at the press conference that inflationary pressures may force them to contain stability, which is their mandate that they keep referring to on a month-to-month basis. Understanding that last month in January, the ECB press conference did trigger a bout of movement on the euro. Some major pairs tried to break their two-day range on Thursday, with none able to get below or above their near-term swing points and easily hold. Fair value has been found on global currency exchanges, with a weak US dollar now holding steady at this point in time. Looking at euro, ahead of the press conference from the ECB, we're just going to be getting back into this 37.50 range, it would seem, that's held euro steady over the course of the last week or so. Outside of movement from the Great British Pound on Thursday that started to test resistance up at the 63 area, and outside of some tenuous tests of support from the euro that we just saw, there are no new momentum moves that look to be able to lead to sustainable gains in the near term. Interest rate markets continued the sideways crawl that has the 10-year Treasury note in a very tight trading range, and that's been in place for over 2 months now. Yields have stabilized on US interest rates, which is in line with equity markets holding at yearly highs. Overnight, trade saw very little movement of note in any regional global equity market, with earnings seasons being the catalyst for long stock positions being held and also protected on any tests of support. Overnight trade saw very little movement of note in any regional global equity market, with earnings season being the catalyst for long stock positions being held and also protected on any test of support, as we'd said. But we are getting a new signal on the S&P here. S&P 500 futures trade is on this chart, and that's going to signal short if the weekly chart can close on Friday below this 1290 area, just getting a little bit of downside pressure ahead of the Wall Street Open. Any move to test support that subsequently breaks that 1290 may have to be a near-term trade, especially we've got support down at this 20-day moving average at 1280 here, because the market is looking to buy the dips at this point in time, but the S&P is the only global equity market close to forming any kind of new signal, in line with what we can see on the Dow Jones, just starting to push a little bit lower on the Dow, and on the Nasdaq as well. If we look at the Nasdaq looks to be leading the move lower on US equity trade. Global equity trade is yet to catch up to those moves. Global commodity markets limit up on the headlines. They've held gold, silver and oil in a sideways range. If we look at each of these, gold now tracking sideways over the course of the last few sessions. We did get a short signal on gold, but very, very mixed and not worth talking about. Silver, we're looking at a more bullish undertone to the silver market than gold at this point in time, but as we know, that can very quickly change, but no new signals in there at this point in time. And we've got oil looking to get back into this channel between 89 and 90.50 if the soundbite headlines do start to transpose themselves into sustainable movement because of the civil unrest that looks to be moving through the Middle Eastern markets. A thing of note, we do have to note this, that the soft commodity markets have been limit up in the last few trading sessions, and cotton did it again overnight. Cotton now up here at $180. So we've gone limit up for the last three sessions, and limit up means that the market will close, reset the algorithms, and then open back up again. Wheat has done the same. Wheat has been pushing these yearly highs, reversed off the high overnight. Cotton pushed up and held it. Corn, same kind of look to them. And these are not necessarily demand related. These are in fears of civil unrest. These are in fear of Suez Canal disruption. These are in fear of the Australian summer, with one side of the Australian continent getting ravaged by storms and a potential tsunami, with the other side sitting in drought. So that's going to impact the wheat harvest there. But also, this was instigated by the Federal Reserve's manipulation of the market that has created raging commodity inflation and huge food price inflation, which I'm sure anybody with a semblance of common sense must have thought about before quantitative easing 2 was launched. But never surprised in this market. The contagion from the disturbance in Egypt has not yet hit the main European markets, but traders will be looking for near-term signals that may force positions to be liquidated. Getting back to gold, if we can get a weekly close below 1320, that's going to instigate a test of support around 1290 if this 1310 area can get taken out. Silver does look to be a little bit more bullish and is holding easily above that $28 support area. Got some huge targets on silver if it does break down, with the biggest one being a move down to 2650, which was the breakout point from early last week. West Texas Intermediate is holding around the $90 a barrel support area quite easily, and does look to be bullish in the near term, although it's got huge resistance up here at 93. There are no new signals of any note on the global commodity, equity, nor currency markets, but it does look as though the dollar index may be putting in a swing point low. And it's just a shame. It looks as though we'll be running out of week, but we do have the non-farm payroll that will be out on Friday, just to throw the boulder into the mill pond and create some momentum ripples.